The market opened the week like they just read a breaking new alert at 3 a.m. in the morning, and suddenly sharp and slightly dramatic movement started to take place. I mean, we have had tariffs are back in headlines. Okay, we thought tariffs are over, they're not. Tariffs are back in headlines. The yen is slipping, Ethereum is wobbling, and the Dow just posted one of its heaviest sessions in about a week. So if the market had a mood today, it would be risk off with a side of uncertainty. Welcome to everyone. If you've never attended a session with me before, my name is Francois. I'm your market analyst here at ATFX Africa, and this is your daily market brief. So today we will be breaking down currencies, cryptocurrencies, and indices. Three asset classes sitting right at the center of tariff tension, shifting risk appetite, and macro headline volatility on this amazing Tuesday. So, without further ado, let's get into it. And I'm going to kick things off today with USD JPY. So, the Japanese yen weakened to, well, almost currently at 156 per dollar, reversing gains from the previous session as the dollar regained footing despite ongoing US trade uncertainty. Now, over the weekend, the US president threatened to raise global tariffs from 10% to 15% after a Supreme Court ruling struck down his reciprocal tariffs. He also warned of steeper duties for countries that play games with existing trade agreements. Now, that kind of language doesn't exactly calm markets. Tokyo responded by urging Washington to ensure Japanese firms would not be harmed, reaffirming its commitment to the US trade deal. At the same time, reports suggest that US authorities conducted rate checks last month to support the yen and were prepared to coordinate intervention at Japan's request. So here's the tension. Trade rhetoric is escalating. The dollar is supported, but intervention chatter lingers in the background. Now that creates a currency pair that's being driven by policy tone rather than pure economic data. So, as stated, USD JPY is currently trading at 155.9. Now, that means it's up roughly about 0.5% on the session. Over the past month, the yen has weakened around almost 1%, and over the last 12 months, it's down more than 4%. So when we have a look at the charts, there's quite an interesting picture. Ooh. So when we're looking at the charts, technically that 155 psychological level is our focal point at this point. So the pair has pushed higher quite significantly, especially today, but the market is very aware of intervention sensitivity, especially in this region. So any sharp move beyond recent highs could amplify volatility, especially if headline shifts. Now, when I'm discussing recent highs, I'm talking about this 157.5 or even this 159.2 to 0.4 level up here. So some key takeaways for today. If we stay above 155, that kind of keeps dollar strength intact for now. Okay. However, a sharp rejection could quickly invite downside momentum. So this is not a sleepy Forex pair today. It's a headline sensitive, reactive one. So as you can see here, larger time frame, massive break of structure here at the moment. So very, very nice and clear bullish momentum at this specific point in stage. Now, let's drop it down to something lower. Let's head over to like a 30-minute time frame. So here we can see again, literally in the last 2 hours, so this was around 9 o'clock, we had this massive bullish candle, big break of structure. So again, good entry, okay? However, what I would do on this one specifically is I'll wait for a slight bit of a retest. So that would require a bit of a move down to here, maybe even push a little bit through. And I would like to see a small bounce at that specific area. Now, if that happens, we could look for a setup more similar to this. Stop loss below the moving averages, also the smaller little support level that we are seeing here. And then it's very easy to look for at least a 1-to-2 risk to reward ratio on this one based on that little bounce. If we can then aim for this resistance up here at 157.5 to 0.6. Now, again, like I said, wait for the price action. Don't just get in on the trade. Wait for the price action. Wait for a little pullback. Wait for a little bounce. If you see all of those things, that could be a nice setup. Otherwise, if it continues all the way down, breaks through support, we could look for some short positions under this 154 level, aiming back down to this 152 level down here at the bottom. Would love to hear what you guys think. Would love to get some input from you guys. Let's move on, and I'm going to move on to our cryptocurrency. So let's discuss, as requested as well, Ethereum. So looking at this specific currency or cryptocurrency at the moment, we are currently trading around that 1,830 level. And we are literally sitting right on top of support. I'm going to show you guys the charts now, just now. Now, even this morning, we are down nearly 2% on the session. Over the last 4 weeks, Ether has fallen more than 35%. And over the past year, it's down around 27%. Now, that's not consolidation, okay? That's pressure. So macro risk sentiment is weighing on higher beta assets like crypto at the moment, okay? Tariff uncertainty and equity volatility are not exactly confidence building for speculative flow. But here's where it gets interesting. While price action currently looks heavy, some forward projections still show expectations of recovery towards the end of the quarter and beyond at this specific point. So the market's narrative right now is, I would say, short-term stress and long-term debate. Okay. I don't think there's a long-term answer for us right now. Short-term, we are definitely stressing. Long-term, debate. Ethereum is currently clinging to key lower support ranges, and that's where technical structure starts to matter. So let's discuss that technical structure a little bit. So as you can see here, this 1,800 level is acting as near-term support. Now, sustained weakness below this region could invite deeper corrective pressure. However, if we get a recovery above this 2,000 level, that would possibly be the much needed boost that Ethereum needs to renew upside momentum. Now, right now, the structure remains cautious to bearish, and sentiment is clearly macro driven. Now, crypto isn't trading in isolation at this specific point. It's trading in symphony with global risk appetite. Now, when we are looking at lower time frames, obviously you can see this is a massive support level. So I'm going to drop down to like a 30-minute. And again, here you can see quite a little bit of consolidation, but we do need to, before entering into any positions on this, I would like to see a change of character first. So a change of character would require a break above our 21 moving average here at the moment. So then a little bit of a push higher, maybe a little bit of a retest to that lower level with a break of structure, giving us an entry here around 1,860. So I would, like I said, a little bit of a push higher so we can get change of character, a little bit of a push back so that retest with a break of structure, and then to get an entry around this 1,860. Can look for maybe a $50 stop on that, and maybe even just aim for that high point from literally Saturday. Like, we're not aiming that far back, literally aiming for a high point from Saturday. And that could set you up with about a 1 to 2.5 risk reward ratio. Again, just wait for the price action to confirm a bit of a recovery here before just jumping into the market, because the fact that if this thing breaks lower, it's just going to continue just chasing stop losses at this specific point. Over the last month, this has been a great range trading instrument. So if you were just following it in that regard, there was definitely a very nice range trade opportunities between highs here and lows here. So here you can see as well, we got close to the highs. We got some nice consolidation. We got a change of character, break of structure, nice sell. 1 to 2 risk to reward ratio on that one. Good setup. Again, close to the bottom, rejected, started consolidating, change of character, break of structure, nice big buy. Again, looking at a 1 to 2 risk to reward. So it's been consistent over the last month. And again, just waiting for a similar setup. So we've got the consolidation now, just waiting for the price action to confirm the change in direction. And that could leave us with a very nice entry, as I said, here around 1,860. Robert, I know you specifically requested this one, so I would love to hear your input on this. While we're on this, let's go over to gold again. So gold is at a very nice level at the specific point because of the fact that, as you can see here, so let's go to a higher time frame first. So yesterday we had very nice, so from actually last week Thursday throughout, we've had very nice bullish momentum. Today we have seen relatively large pullbacks. So, initially markets broke through this resistance, which is now newfound support. And if we're going down to some lower time frames, now we can see this amount of consolidation that's starting to take place here. Now, again, this all depends on your trading strategy. Now, and why I'm saying that is because gold has been providing a lot of volatility lately. So you can either wait for a slightly larger setup, which if we're looking 15 minutes, that would require a break above, I would say, this 5,188 level. You can either place your stops at this low or this low. It's your decision from there. And then you'll have about a 1 to 1.5 risk reward ratio on this. Okay. If you like me, I'm trading very low time frames at the moment, especially because of the increased amount in volatility. So I normally drop this down to like a 1, even a 5 minute, maybe even a 1 minute time frame, and trading, the price action on these lower levels. Again, you want to see a slight breakout of that higher area first. So that would definitely require a break of this range that we are seeing here before we are going to see nice setups. And I mean, it's not that hard to wait for this, traders. I mean, literally yesterday, there was so many nice setups. I mean, initially in the morning, we had a little bit of consolidation here. And then we had that initial break, large. So there was quite a few nice trades early in the morning as well. Again, I was trading these on lower time frames. So, it was trading this break of structure here at 7 o'clock in the morning. On the lower time frame, this was another break of structure to trade that. Start of US session, we had a lot of volatility, waited for the volatility to calm down, and then you could trade these massive moves here again. Again, you see quite a bit of consolidation. This was late last night, early hours of this morning. I was fast asleep for this, but again, you're seeing the pattern that is forming here. So again, now we're in that consolidation. Now we just need to wait, break or break lower, and then trade that rally in whichever direction it's going at the moment. And yeah, like I said, this is providing a massive amount of trading opportunities right now. So just wait for the smaller structure. At the moment, I'm still bullish bias just because of the fact that we could, like I said, we could probably push down to this level here at, what's that? 1,120, just for a larger retest of that support. But the general momentum is definitely at this point in stage looking bullish, with an aim for that all-time high. Okay. Agree with gold as well. Appreciate. I see Tokyo giving good momentum, but I am asleep as well. Yeah, at the end of the day, at the moment, traders, I'm of the notion that there is a decent amount of volume throughout the day. Okay. Yes, there is more volume in the Asian session that we have seen in a very long time. But in general, the momentum, the volume, everything is pushing higher and pushing to new heights. So trade when it is comfortable. At the end of the day, you also need to enjoy what you are doing. And unless you have a screaming baby at 2 o'clock in the morning and you have a reason to be awake, don't just wake up to start entering trades and then also try and make it through the day. You're not gonna find enjoyment in that anymore, or you're gonna put so much pressure on yourself that it's gonna become really difficult to maintain, if that makes sense. Okay. That being said, let's finish things off today with equities or indices, more specifically the Dow Jones. We'd had one of the roughest sessions in weeks. So the index was down nearly 900 points, closing around 48,830. Now, that means it was down nearly 1.8% yesterday. So the decline was mainly led by IBM, which took a massive knock of over 13%. American Express was down 7%. Salesforce was down 5%. So USD is currently trading around 48,850, and it is taking a bit of strain. Now, it is also finding support. So I'm going to pop over to the charts just now, but some stats. Okay, over the last 4 weeks, the index is down around 1%, but still up 12% over the last 12 months. So the driver here is relatively simple. Tariff uncertainty plus macro stress equals equity caution. So markets are not just pricing earnings anymore. They're pricing policy unpredictability. And when uncertainty spikes, broad indices feel it very, very quickly. So when we are looking at the charts at the moment here, let me just, right, there we go. So we can see that support is forming around this 48,750 level and is where it bounced in the beginning of Feb as well. Okay. Now, resistance is relatively clear up here at 49,400, where the recent pivot kind of took place. Now, momentum in general has softened. I mean, the tone at the moment is risk off, which isn't beneficial for indices, but the index is still holding within a broader range. So if we have a look on a daily, you can still see that very large, broader range that is still intact here. Okay. But that also clearly opens up the opportunity for additional pullbacks. So dropping down to a 4-hour time frame again. Now here you can see we've broken out of the smaller channel that we have been in since November. Now, again, that would create an opportunity for, if price action breaks below, let's call it 48,760, that opens up the door for a drop back to the bottom of the range. Again, not breaking bullish momentum. Bullish momentum is still there, still intact. Okay, I'm not changing the bias here for indices, but trading on lower time frames, it gives the opportunity for a pullback down to this 48,300 level. Now, just looking at a little bit of a setup here, let's say you get your entry around 750. You can have a relatively tight stop on this. Let's go in 49,000. And just aiming for this level down here, you're looking at a decent 1 to 1.8 risk to reward ratio on that. Almost 1 to 2. Okay, so definitely a nice little decent small pullback intraday trade, maybe even a day trade, opening up some opportunities. And then again, if the broader range kicks back in, could see some nice big rallies from that lower level there once more. Now, again, if price action doesn't confirm that, so I'm dropping down now to a 30-minute time frame. Here you can see a relative amount of consolidation. If price action moves higher here, breaks back in the channel, bullish momentum is back on the table anyway. Okay, so this setup over here only works if this rejection takes place and we move lower and then break. We've had our change of character, so on the 30-minute time frame, that would be our break of structure, which from a price action perspective puts that on the table. So, yes, in essence, the question that we need to answer here is, does this turn into deeper correction, as shown on the chart at the moment, or is it simply another volatility wave in a headline driven here? Again, I would love your input and thoughts on what I just showed. Let me just see here. Wow, that US 30 looks like a strong short condition. Yes, it definitely does look like a really good opportunity at this specific point. So definitely some consideration to be taken on that specific trade. Okay. So traders, as we are heading into this session and into the rest of the week, some things we need to look for. Firstly, tariff policy clarity. Any confirmation or escalation or policy reversal can rapidly shift currencies, equities, and crypto sentiment. The second thing we need to look out for at the moment is risk appetite signals. If US 30 stabilizes, watch how Ethereum responds. If equities continue lower, cryptos could remain under pressure as well. So there's a lot of confluence at the moment within the market at this specific point of stage too. So then number 3, currency intervention. Any renewed commentary around the yen or support or additional support for intervention readiness could inject a lot of volatility into USD JPY right now. So markets at the moment are reacting first and then analyzing secondly. And this is why I've always said, as a trader, we need to be extremely reactive in what we do, because at this point in stage, markets are reacting to what's happening and then kind of figuring out if it was a good idea. So in this kind of environment, levels matter more than opinions. So please keep a close eye on your charts and everything that we just shared during the session. I would love some feedback from you guys as well, how you are finding these sessions. If you're willing to pop me an email, my email is marketbrief@atfxafrica.com. Or even if you are happy to go onto Trustpilot, head over to Trustpilot, just search ATFX. We'll pop up there. And I would love if you guys just leave me a review. Just how you finding the sessions? Are they beneficial? Anything in that regard. Okay. Any type of feedback you guys can give me so that I also know how to help you better, or whatever I'm doing to keep doing, and so forth and so on. Okay. Perfect. Thank you so much. So traders, that kind of wraps up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Now, if you are not trading with ATFX yet, please head over to atfx.com and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.